Now that the stock price is plummeting and the world appears to be in disarray, everyone is wondering if they will be able to retire on Tesla stock. If so, how many shares do we need at these absurdly low prices? Fortunately, the silver lining is that buying more shares makes it easier to accumulate them, which will increase our value over time. So let's dive into these uncertainties and consult the updated chart. If you're already on board, hit the like button, grab some popcorn, and if you haven't subscribed yet, now is the perfect time to learn what it takes to retire comfortably and passively by 2030. Tesla's declining trajectory. Even though the stock market seems to be going nowhere, and it's difficult to get a break, let's take a minute to celebrate these low prices in the middle of the mayhem. After all, many of us are in it for the long run, hoping to retire comfortably in 2030. By 2030, we need a passive monthly income of $6,000 or $72,000 annually to be able to retire quite comfortably. This computation accounts for an annual inflation rate of 5% from 2022 to 2030. Although there are others who contend that the inflation rate may be lower, let's proceed cautiously and use this figure. In order to produce this income, a $1 million investment would need to yield a 7% return. What will yield a 7% return by 2030 is the key question. And while some may think of hanging on to Tesla and making money from it, we can't be sure about its future. Replies, however, it should be on the safe side as the S&P 500 has historically averaged about 10.5% annual return over the past century. Assume, for example, a 7% return. It is impossible to forecast market movements with complete accuracy. I understand that, given the possibility of larger gains, selling Tesla might not be your first option, but we also need to take the data into account. Although Tesla has been in business for 15 or 17 years, which is great, the S&P 500 has a 100-year history that is more reliable in the long run. These are the qualifications you'll need to retire comfortably by 2030. Keep in mind that this plan should last you for a good 40 to 45 years, so you have a long journey ahead of you. Now let's look at the various scenarios in the extreme bear case, where 10 million vehicles are sold by 2030 at an average selling price of $40,000. Gary Black estimates $48,000, but we're erring on the side of caution. In the case of energy, we're projecting revenue close to $28 billion, assuming a 20 compound annual growth rate beginning in 2022 with an operating margin of 20, which would translate to over $5.5 billion in profits. At $40,000, this would result in vehicle revenue of a whopping $400 billion and an operating margin of 20, translating to $80 billion in profits. Now let's not neglect services. If we look at the Q1 2020 earnings, services have been expanding nicely and making a profit, so let's assign it a 20 operating margin. This would yield roughly $8 billion in service profits, which is why I think services will become a substantial contributor to Tesla's revenue and profits. In sum, $466 billion in revenue, $93 billion in profits, and 3.25 billion outstanding shares are what we're looking at to explain the success. Since it wouldn't make sense to dilute, I've incorporated a share buyback. Proceeding to the bear case, a few things have changed. 50 million vehicles were sold, with a $35,000 average selling price. Energy revenue is expected to reach $60 billion, assuming a 25% compound annual growth rate. Services with an operating margin of 20% would yield about $8 billion in profits. All told, this means that we're looking at over $600 billion in revenue, almost $124 billion in income, and an EPS of more than 38. Let's now discuss the base case, which assumes that 20 million vehicles are sold. I have my doubts, but who knows? Tesla might just pull it off. But even so, the average selling price would be $30, and energy revenue would increase at a compound annual rate of 30% to reach $47 billion. An estimated $77 billion will be made in service income, bringing the total to above $700 billion. EPS would be, and net income would be about $145 billion, almost 46. In the bull scenario, 23 million vehicles would be sold annually at an average selling price of $28,000. Energy revenue would increase at a rate of 35% annually to reach $62 billion in service. Sales would rise to over $88 billion, which results in an EPS of 48, net income of more than $150 billion, and total sales of around $800 billion. In the extreme bull scenario, where 25 million vehicles are sold at an average selling price of $26,000. Energy revenue would soar to $80 billion and expand at an incredible 40% every year. Services would produce an astounding revenue of over $100 billion, which comes to a total revenue of over $808 billion, with a net income of $176 billion and an EPS of more than 51. It's wild, but please remember that these are only projections and not facts. With that said, have a seat and let's explore the possible prices of Tesla stock in 2030, from the ultra-bearish ultra-bear case scenario to the optimistic ultra-bull scenario. The ultra-bull scenario is predicated on a P/E ratio of 15, whereas the ultra-bear situation assumes a P/E ratio of 25. Get ready for these astounding numbers and the extreme bear case. Moving up to the latter, the base case predicts a stock price of over $1,100 per share with a market cap exceeding $3.6 trillion in the majority. We could witness Tesla stocks soar above $1,200 per share with a market cap approaching $3.9 trillion. The stock price could reach an astounding $788 per share, resulting in a market capitalization exceeding $2.3 trillion. Ultimately, in the audacious ultra-bull scenario, the stock price might rise to about $1,300 a share, increasing the market capitalization to almost $4.2 trillion. These incredibly impressive figures leave us in wonder of Tesla's possible future trajectory. Let's now turn our attention to the quantity of Tesla shares needed to achieve financial independence by 2030. As we compute the number of shares required at different stock prices to reach that coveted million-dollar milestone, I hope you're ready for the most exciting part. Remember that we're basing our research on the current stock price, which is about $150 per share, so any changes could have an impact on the overall worth. With that said, let's dive in. Under order to reach $1 million by 2030 under the extreme bear scenario, roughly 1,393 shares, or a $210,000 worth, would be required. As you can see, this represents a significant improvement requiring $50,000 less dollars than the ultra-bear case. While $200,000 is not a small sum, especially during a recession, it sets the baseline for our calculations moving up to the ladder. We encountered the bear case where 1048 shares or a dollar value of overall $157,000 would be sufficient. As we go closer to our objective, let's examine the base scenario, which calls for 892 shares or a dollar value more than $133,000. 774 shares or a total value greater than $160,000 are required for the bull case. Ultimately, a meager 726 shares, or a dollar worth of roughly $108,900, would be sufficient to start down the road toward the million-dollar milestone in our bold ultra-bull scenario. A significant milestone, the case of the ultra-bear, the default scenario, the ultra-bear case could appear overwhelming given the high stock price, but the bull case and the hyper-bull case each have their own conditions and possible outcomes. If you're dedicated and diligent, success is not unachievable. The base case is a more realistic scenario that calls for a significant but manageable number of shares and a monetary amount, although it's better than in the past. Achieving your investing goals still requires perseverance and faith in Tesla's development potential. Let's now focus on the bull case within reach, which shows a much higher stock price prediction. If the scenario materializes, there could be significant gains, even though it still requires a six-figure investment, making it comparatively better than the previous cases. It is worthwhile to investigate various scenarios in order to fully understand the possibilities. This is not just one person's opinion. Even long-term investors who have become pessimistic recognize Tesla's bright future. When fully autonomous driving is resolved, the market will shift in Tesla's favor because, as they have experienced, they too have doubts. Retiring comfortably with Tesla stock by 2030 is entirely possible. Before and disprove the doubters, that concludes our video. Please hit the like button if you found it entertaining and subscribe to Test the Stock News for more fascinating stuff. Let's continue this trip together. Thank you. FSD will continue to revolutionize the market.